From IPOs to M&A deals, Sachin Shah is a special situations and merger arbitrage strategist at Tullett Prebon Americas. Sachin, welcome to Money Moves.
Thank you, Deirdre.
Very glad to have you here.
Happy Monday. I don't know if I wish you a happy Monday earlier.
You haven't yet, but we're so glad you're here. We know your expertise is essentially gauging, handicapping the odds of mergers closing, and of course the timing is part of that as well.
Correct.
You think that global consolidation is going to continue? First of all, I want to ask you, why is that? We'll start broad, and then we'll get down to some of the companies that you're watching.
Sure. So I've been saying this, I've been on the show for more than a year, and it's actually occurring. And so the situation in Europe, the situation in the US is, I believe, precipitating even further consolidation. And so, the theme here, I talked to you about... Is it just
uncertainty and a more modest outlook for growth?
Correct. So there is a lack of growth on the top line. Companies are not innovating, Deirdre. They're not innovating. That is the bottom line here. So they're not innovating. They're figuring out how they can basically grow, and they're either having to consolidate. And this morning, we saw Amgen announce a Dutch tender for $5 billion. So they're trying to extract some kind of value or monetize, maximize shareholder value for shareholders. They're thinking of any way possible. But the issue here is that consolidation on a global basis, not just in the US, is occurring. So you're seeing a lot of consolidation in Australia, Canada, as well as Asia, but not right now in Europe because of what's happening there.
Because of what's happening. I heard you mention Amgen. Are there specific sectors that are hotter than others for what you do, Sachin?
Across the board, Deirdre. So obviously technology, biotech, any sector that has cash or hidden assets or off-balance sheet assets that basically appear, a strategic peer could take advantage while their stock is down. We're going to see that. We're going to see shareholder activists come into play, like the Carl Icahns, like the Third Point Daniel Loeb with Yahoo, which I've talked about in the past as well. We're going to see more shareholder activists coming in primarily because stocks are declining and it's not valuing the intrinsic value of some of these companies.
So, Sachin, I know there's a few companies you're watching where the spreads have narrowed so much. Actually, some of the prices are even trading above the proposed deal price. So that shows a lot of optimism, right?
Yes, that's correct. But let's take a step back here. Back in August, when we started to see some of the volatility, as we're still seeing right now, August, some in September, some in October, right now as well, those spreads widen out tremendously.
Which is almost a bearish indicator, if you like.
It's a bearish indicator that the deal is going to close. But like deals like Petrohawk was going to be acquired by BHP. They completed that transaction. We've seen across the board deals being completed in light of the volatility.
Give us a few other names just so we can follow where the spreads are coming in.
Yeah, so right now, is being acquired by Oracle. Ticker is RNOW, right? And so the stock is trading very close, and it has over the past week, since the deal has been announced, above the deal price, which is $43. iClick, ICLK is the ticker. It's being acquired by Yahoo. The same situation there. You have Hathor, which is a Canadian miner. They basically do uranium. And so the ticker is HATCN. So there is a bidding war, presumably, with Rio Tinto. They made, so just take a step back here, CCJ, Camco, they made an offer for $385 Canadian, and then Rio Tinto came in as a white knight and said, here's $415. They signed a definitive merger agreement. The stock rallied, now it's trading at $453 Canadian, but the offer is $4.15.
Yep. We were talking about some of these companies that are on your watch list, how the spreads are coming in.
Or above.
Or even above the deal price, which means a lot of opportunity for people like you, a lot of good names to suggest.
Sure.
You mentioned a few of them, but I know you're watching at least one deal today. What is it?
So there was 3 announcements today, Deirdre, small transactions, and the 2 ones that are interesting, the first one I want to bring to people's attention is force protection. And so the theme that we're talking about, global consolidation, I wanted to emphasize, a theme that I focus on every day is equanimity, okay? And so the equanimity referencing the board doing the right thing, innovating, which they're not doing, and actually protecting shareholders. They're not doing their fiduciary duty. And force protection, the deal announced today, it's being acquired by GD, General Dynamics, this may be a situation where there's not enough equanimity, because when we had the call, the stock is, the offer is $5.52. The offer is $360 million. 120 million of that proceeds is net cash on the balance sheet of force protection. And so the board is not protecting shareholders based on a conference call just before I came here. They did not want to outline if the company was basically auctioned. They didn't do their fiduciary duty. They didn't want to talk about termination fee. They didn't want to have these discussions, which is very important to shareholders.
So now how
and it's trading through. So it's trading through. So before the call, $4.42. The offer, I'm sorry, $5.48. The offer is $5.52. It's a 4-cent spread. Now it's trading at or above it, because people know, shareholders know, the market knows.
I'm actually just looking $5.48 right this second. So as you say, it either trades at or above because people know.
Yes, something is going on.
Yeah.
Why is the board not saying anything? And the same thing with Tekelec, which is being taken private by private equity, and so it's trading at or above, I think it's 11.04. The price offer is $11. So you're seeing that kind of activity because of not the disclosures, not the transparency, not people like me being able to ask questions to the management.
So then obviously the market just assumes what the next step is.
Yes.
Talk about here, we're looking at that, well, that's Tekelec, what we were just talking about, but you're also watching Transatlantic Holdings,
yes.
TRH is the symbol, and Validus Holdings, which trades under the ticker VR, and this is another spread that you're following pretty closely.
Yeah, so this is not a merger arb situation yet. And merger arb is a definition of deal that has a definitive merger agreement. This is a special situation which I also cover. So it received an unsolicited offer, various unsolicited offers in the past, including Warren Buffett's National Indemnity for $52 in cash, which are rejected because it cited that their book value is significantly higher. They just reported third quarter results. Their book value essentially is just under $70, Deirdre. The offer from VR right now is an implied $57, $58, okay? So they made this offer of $57, $58. There's a $3 spread that you can play if people believe the deal is going to close under the terms. It should not close under the terms that were offered by VR, primarily because the value of TRH is significantly higher. So what I believe, as they put out in the presentation, they essentially said, our book value is the same as yours. Why are you giving us a lower consideration? So if you use that as a benchmark, then that means the consideration should maybe be higher at $5. Their book value is close to 70. So what shareholders, if they're looking at this, they have an opportunity to either make $5 or up to $12 or $13. In percentage terms, that equates to 15 to 27, 28% on a nominal basis, not annualized. Yes.
And you are, just to sum up, are telling us that essentially more of these opportunities are going to be coming versus less, and then just sort of reminding our viewers too that back in August you saw this consolidation round coming, but the spreads were extremely wide, and now they're
expected them to narrow and close.
And this is what's happening, and it's a signal.
Yes. So just to sum up, if you don't mind.
Of course.
Okay. More M&A, more strategic alternatives for companies like Eastman Kodak. You're going to see more of that. Companies that have patents that they don't know how to monetize. So you're not going to see the company.
That's a great point.
AMR, okay, they're in a debt situation. Are you going to file for bankruptcy? Or are you going to look for a transaction or some way to maximize shareholder value?
In that case, too, a lot of people say they just issued new debt.
MF, the global, excluding what's going on there, that is a special situation, Deirdre, in the context that they're trying to maximize shareholder value of the assets that it's not understood by the market.
All right, Sachin, we're glad to know how your mind works. We're glad you took the time to explain, take us through a little bit. Namaste, Sachin Shah joining us there. He's also a yoga expert, so we get yoga terms as well.